Thank you so much, Dave, and thank you for having me here on your show today. Good afternoon, everybody. Today, I will be talking about my 15-minute futures income blueprint. I only trade the power hour, and this is the time for me to day trade and also identify the best swing trading opportunities that we will be talking about today. All right, so let's get started. My name is Anka Metcalf. I'm the CEO and founder of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest into the market. I have been doing this professionally for over 25 years, and I come with 10 plus years in investment banking. I specialize in high velocity trades, and what this means is that I find the inflection point on the chart where the price action is likely to explode, whether to the upside or to the downside. We're going to get a little bit into that in this presentation as well. So how many of you guys would like to take control of your financial future for you and your family? And for me, it was a very easy decision. When I started day trading, I was coming from a financial background, and I realized the potential by trading on your own, by trading your own money. And I first dove into education. I didn't open an account first. I dove into education. And then after that, I opened an account. I quit my job and I started doing it professionally. It was a long road, but it was fully worth it. So whether you're looking to generate income or supplement your income, I think that the market is the best vehicle to achieve that. So my goal for us today is to understand the process and to understand the process that I follow every single day. So some of you guys may be, new to trading, and some of you guys may come from stock trading, right? And I'm here to tell you that for over 20 years, I have been literally trading stocks only. And not only that, but even before that, when I was on the investing side, I was trading stocks. I would never trade futures. And it was brought to my attention that if you look at the futures markets, and not only that, for convenience, for price efficiency, for tax purposes, and basically for tax purposes, this is the number one reason why I dove into the futures market. And that was about 12 years ago. And I never looked back because it's so much easier. And I'm not going to say that it's easy to trade futures. No, far from that, because trading is not easy. It is simple if you understand the rules, and if you apply the same template for the setups, for the system, for the strategy, you're simplifying your trading. But trading is not easy. So you need to learn, you need time in front of the screens, you need to learn how it's done before you dive into the markets and before you start risking money. So here are some advantages of the futures market. So number one is leverage. You have a lot more buying power. You have a really high liquidity. This is a really high liquidity market, especially when you're trading the major markets like NASDAQ. You're trading the S&P, so the S&P 500, you're trading the Dow, you're trading Russell, plus you're trading markets like gold, like natural gas, like currencies, like grains, etc. So these are some of the most liquid in the world. You guys seen what gold is doing, you guys see what silver is doing, you guys seen the coppers trade, right? And these are a gold mine if you know how to identify the trading opportunities. And also, there's one detail: know what to swing trade and what to day trade. We're going to be talking a little bit about this as well. And we also have really tight bid-ask spreads. And that creates a really good foundation, especially for entries and for exits. You're not going to get slippage the way it happens in, for example, in the futures markets. So you get this really high liquidity that is working for you, and especially if you trade the morning hours. Now, as you know, the futures market is a 24-hour market, and let me tell you, even in the nighttime, I would say 9, 10 o'clock, 11 o'clock at night, it's still a liquid market. So if you have swing trading opportunities that are lining up within that period of time, you could still take the trade. And this is one of the huge advantages of the futures market because it's a hands-on market. Events don't wait for the markets to open. You don't have to wait until 9:30 or just before the market opens. You can trade at 10 o'clock at night, 11 o'clock at night, 4 o'clock in the morning, etc. Because you're trading either the Asian session or you're trading the London session, or you're trading just like me, the New York trading session. So it's great for those that cannot trade traditional stock market hours. So if you have a full-time job, look at the futures market. It's a great alternative. Also, low trading costs. Futures commissions and fees are very, very low. So no pattern day trading rules, you guys know, more freedom to trade actively. You also get tax efficiency, a great tax efficiency on trading futures, and this is the #1 driver that got me into the futures market. First of all, the taxation is great. Talk to your CPA or accountant. I'm not here to give you financial advice or accounting advice, but 60% of the gains are taxed as long-term at a lower rate, and 40% are taxed as short-term ordinary income. So there are huge advantages, and there are way more advantages here than I have placed on this sheet. So whether you want to search for it on the internet or you want to talk to your accountant, I'm pretty sure that you're going to look into the futures market, even if you are a stock trader. Because at first, when I was a little bit reluctant, because I was already having huge experience in stock trading, so I really didn't want to reinvent the wheel. But when I looked back and when I saw the charts that are exactly the same as I was looking at NASDAQ and I was looking at the Qs. I was looking at the SPYs, I was looking at the MA/S&P. So the only difference is that instead of trading shares, you're trading contracts. So trust me when I tell you this, like if I did it, you could do it as well. So if I left my addiction to day trading stocks aside to day trade futures, you can do it as well, because I'm literally in love with the stock market. And of course, there's transparency and regulation, because trades are regulated on exchanges like the CME and NYMEX. And you have diversification opportunities. This is what's so great about it, because futures covers everything. So you can trade the major indices into the market, just like I mentioned. You could trade markets like NASDAQ. Literally, NASDAQ has 100 stocks under it. You could trade the S&P 500, 500 stocks under it. You could trade the Dow, 30 stocks under it. You could trade Russell 2000, 20 stocks under Russell. So you have huge market that you can control with your indices. Plus you have the currencies, right? You can trade currencies. You don't have to trade Forex. And I have been trading Forex, and I've literally traded Forex for gazillions of years. So you can trade currencies through futures. You could trade the dollar, you could trade the euro, you could trade the yen, you could trade the Aussie dollar, you could trade the pound, you could trade so many currencies. It is ridiculous. So if that is your niche, then you could dive into futures and trade currencies. You could also trade commodities, gold, oil, copper, natural gas. You saw huge price swings last year and this year. They have been literally almost going parabolic. This is historic what we're witnessing right now in gold, in silver, and even in copper at new all-time highs, almost new all-time highs every single day. Like, if I'm not mistaken, the last time that I checked gold today, gold futures, it was over 3.4% on the day, again with a new all-time high today. You can trade bonds, you can trade interest rates. So you have a very large array of instruments that you can trade under the futures market. And it also funnels your attention. I'm going to show you the panel in just a few seconds, but it focuses you so you don't have to be scattered and scan 6,000 stocks. So versus 6,000 stocks, you're watching just probably 7 charts. And allows you to hedge or speculate across asset classes. This is huge, because a lot of the hedge funds, if not all, a lot of the hedge funds and institutional traders that are trading stocks, they don't hedge anymore using the VIX. Have you noticed that? They're using futures, okay? And then number 8 is professional level tools for everyone. We have access now to instruments and platforms and charting systems and real-time data and risk management tools that were really not around like 30 years ago, 40 years ago. So we have everything at our fingertips to learn how to trade and actually execute the trade. So futures trading levels the playing field for serious individual traders. And did you guys know that in 2018, when there was a big shift in the market that produced, well, a lot of you guys may recall that maybe have been trading for a little bit longer time, but that was the time when banks like Morgan Stanley, Chase, Bank of America, Goldman Sachs allocated more traders from their from their stock trading desks to the futures desks. And that is when we saw a massive growth in volume and also in volatility. That was the start of volatility. It wasn't 2020, and it wasn't after the pandemic. No, it was in 2018. So we're talking about the panel. Okay, so I'm telling you what I focus on. Everybody's different, but this is my game plan, and here is what I trade, and especially what I focus on in the first 45 minutes of the day. Into the Dow, S&P 500, NASDAQ, and Russell. These are my bread and butter. These are my indices. These are my employees. These are my income sources. These are my 4 charts that I look at for patterns. I keep it focused, funneled into these specific 4 charts. And then, of course, I look at oil, I look at gold, I look at silver, I look at platinum, I look at palladium, I look at copper. These I use mostly for swing trades because they're very volatile and they have the potential to generate a lot of R's, right? So when you enter a trade, ideally is to generate at least 2 or 3 R's on a trade, because if you're generating just 1 R, you have to make sure that you're really good and you have a phenomenal win ratio of over 85%. Other than that, it can work against you. And like I said, you could trade the dollar, the yen, the euro, the pound, Canadian dollar, the Swissy, the Aussie, in Bitcoin as well. You can trade Bitcoin. By the way, we do have a swing trade in Bitcoin active now. That actually put a reminder because we need to roll into the February contract tomorrow or the next day. You could also trade the VIX. You could also trade the 10-year note, the 30-year bond, the 5-year note, or the 2-year note. You could trade sugar, feeder cattle. You could trade lean hogs. So you have a wide array. But if you want to keep it focused, right? So versus the 6,000 stocks, right? This is a gold mine right here because this is your playground, okay? So my trading universe, basically for day trading, is comprised only from these 4 symbols right here: the Dow, the S&P, NASDAQ, and Russell. And I watch them like a hawk. If you wake me up at 2 o'clock in the morning, I can tell you the ranges that I was trading into the prior day or that very day. Metals, obviously gold, silver, copper, energy, natural gas, and crude oil, and bonds, yes, ZB. So when I start the trading day, I basically look at these 4 charts. Like I said, the Dow, NASDAQ, the S&P, and Russell. And I'm going to walk you through my process with my top-down analysis in a second, with the indicators that I use, with the strategy that I use. But when I look at these charts, I know exactly what my game plan is. Okay, so I know whether they're in the range, they continue to be in the range. So I mark the areas. I'm going to show you exactly what I do. If I see an index that is trading into all-time highs or into new highs, I immediately execute some projections. So I know what the next target is, my next measured move is into the market. And basically, when I start the day, I look to see what the major structure is into the market. And first of all, a lot of traders would actually focus more on identifying a setup. I first look at the chart structure and I try to evaluate the charts, whether they have relative strength or whether they have relative weakness. And I try to create a synchronicity or a divergency momentum for these particular charts. So many times you're going to see that the Dow is pairing with Russell. So they have the tendency of following each other. So when we have a strong Dow, sometimes we have a strong Russell and Russell follows through. When we have, for example, a strong NASDAQ, then we have a follow through in the S&P as well. There are times and there are trading sessions where all the indices move in sync. Those are the simplest trading sessions. And actually you could trade one or more indices throughout that day. Because if you have an index that is very strong, and if it has a very early trigger and you miss it, it's always easier to go to the next index when they're in sync and that has not triggered and follow that specific setup. But when you're getting a divergent market, this is very tricky. And the reality is that you really don't know which index is going to impact the other index or indices. Because if you're getting weakness in YM, for example, here, and in Russell, just saying, at some point, even with the strength generated in NASDAQ NES, if, for example, they hit resistance or they're at resistance, they can create the roadblock. They create that resistance creates a roadblock, and the price action could start pulling back. It's just that NASDAQ and NES are going to be possibly the last ones that they're going to start following through lower, along with the Dow or Russell, for example. And these are very specific things that I look at in the morning. So other than that, I look at the trends. I do a top-down analysis from highest time frame to lowest time frame. We're going to go through that in a second. And then I look at the possible setups that are formed onto the intermediate time frames, like the 30-minute, the 1 hour, the 4 hour, that could potentially find triggers in the New York trading session open. So when the session opens at 9:30, I'm ready to assess the cleanest setup, and I know exactly what my direction is, because one of the problems that many traders have is identifying the directional bias, and they find themselves going long, going short, taking long, taking a short. So for example, in a base, a lot of times you're going to see that the bottom buyers into the bottom of the base are often stopped out. And especially with a high volatility, you have literally those slingshot candles, those bottoming tail candles that are triggering the price lower before launching back higher. And they wipe out a lot of accounts before the price goes back up. So we want to eliminate that. This is a quick snapshot of my account from from 2 years ago. Forgot to update that for 2025. And you can see that it is not very complicated to generate income if you know what you're doing in the market. And I think one of the key components that I want to talk about is, and we're going to do that perhaps in a few moments, and if we have the time, is position sizing and knowing your risk level, because that is the most important component. A lot of traders think that they can trade because it's the futures market. I'm telling you right now, I don't know why this misconception is into the futures market, and I don't know where it came from. And a lot of people are generating and literally just repeating the same mistake over and over again, that they can trade with one contract, standards of one contract, or standards of two contracts, or a standard of, I don't know, micros. They're especially traders that are beginning, they go like, oh, we're going to trade two standard contracts. And my question is like, why? Because you have an account size, you need to position size, because you need to keep your losses in check. Because if you have a losing streak, then you could potentially lose on that 5 trades more than you could have if you would have position sized. So it is very hard to recuperate the money that you lost without position sizing and just trading that flat size contract. We're traders, we know how to do simple math. I equip my traders with risk calculators, with position sizing tools, with everything that they need to have so they can actually execute all the trades through position sizing. I mean, there is no such thing as trading without a position size. And a lot of times, one of the biggest problems is that they open the door to a lot of risk because they think that they're eligible to trade 5% or 10% or 50%. Believe me, I had a lady in an open house that we've done, and she applied 75% of her account in one trade that I called in the trading room. Luckily, that trade worked out, but had it not worked out, it would have been devastating for her because she would have blown up her account. So pay very close attention to these things because they are incredibly important. They're more important than your strategy. They're more important than anything. And you could be a perfect chart reader. You could be a perfect chartist. You could be a perfect technical analyst. You could be like the most perfect trader in the world. But if you don't know how to position size, you're going to blow up that account. And I'm not saying that 90% of the time or 80% of the time, guaranteed 100% of the time, you're going to be blowing up that account. So we're going to dive a little bit into what the power hour is, because I only specialize in the power hour. It was not always the case. I would be taking probably 9, 10, 15 trades in a day when I was day trading stocks. But now I'm very selective. And when I switched to the futures market, I learned the power of patience. Because when you're trading stocks, you can find a setup every 2 minutes, especially if you have a scanner. But in the futures market, you have to wait, right? So we're going to talk a little bit about the power hour. So what is the power hour? And basically, there are 2 power hours. Okay, there is one in the morning in the first hour and one towards the end of the day. However, I trade the first power hour. So the term power hour refers to a New York trading session open where there's typically a surge in trading activity and into volatility. And this period is often characterized by higher trading volume and more significant price movements, which can create the opportunities for traders to capitalize on short-term market fluctuations. And I know a lot of traders step away from the first hour because they don't handle volatility well. They don't know how to handle volatility. But if you have the right instruments and the right setups, and the right structure into the market and the right position sizing, everything is easy when it comes to the first 5 minutes to the first 15 minutes into the market. They're the easiest to trade, and we have a system for that, proven system for that. So the best times to trade the power hour are obviously from 9:30 to 11:30. To 11 o'clock or 11:30. And the reason why I'm saying 11 or 11:30 is because sometimes you're getting a slow market. You're getting a market that is literally reacting in slow motion. And there's no reason to exit the trade just because the power hour is, over. You have to stay in the trade as long as you have a trailing system. And if the trade is still on, if you have your entry parameter and it triggered and you have a stop and you have not yet achieved your target one, there's no reason why you should be exiting the trade. So you should sit there until the trade runs its course, whether it stops out or it's hitting targets or you are in a trailing process. Now, my favorite times are from 9:35 to 10:35, and this is because I have strategies that kick in like an algo at 9:35. So I could execute in a good market environment day. And that is when we don't have a range bound market, when the market is trending powerfully, when the market is either breaking out or breaking down at 9:35. So this was my first signal into the market. So we have precise strategies that trigger into the 9:35, 9:35 and 9:45. And then trace that trigger between 9:35 and 9:45. Usually have a very short duration, short life, because they accelerate due to the volatility, and we're ready to close them at 10 o'clock where the reversal time kicks in. So we're very careful about that timing because this is the first surge in momentum. And that is when we trail tighter, because at 10 o'clock, if something went up from 9:30 till 10 o'clock, likely the market is going to pull back around that time, around 10:15 to 10:30, and then you have the last big hurrah into the market, which is the 10:30. If you don't have a setup that is setting up by 10:30, then you don't have a setup at all, because you're losing the momentum, and then you're hitting the doldrums at 11:30. The limit session is closing, so you're losing a lot of volume into the market. But 10:30 is the cutoff line. So if you didn't have a trade in the morning, if you don't have a trade by 10 o'clock or 10:35, then the day is pretty much done. Very rarely have I seen setups, but I have seen setups sometimes, not very often, trades that have been setting up around 11 o'clock or 11:10 or 11:15, but that's pretty much it. And yes, we took them. So this is my favorite time because you're getting the most volume into the market. This is where the institutional orders kick in. You have high volatility, you have news momentum, so that means reaction. You have the 9:30, I'm sorry, you have the 8:30 data that is kicking in, that is actually giving a chance for the US market to react at 9:30 at the open. Because the London session and obviously the international session is reacting at 8:30 when the data is coming out, like the CPI numbers, the PPI numbers, what have you. And then you're getting the calibration and your calibration and reaction into 9:30. And this is what I absolutely love. News plus momentum equals reaction. Plus, now we're in full swing earnings season. So now we're getting the reaction from stocks, right? So it's going to be a big day. Tomorrow morning is going to be a big day, and Friday is going to be a big day, right? So Friday's going to be a big day because we have, let's say, XOM that is going to report on Friday, but on Thursday night we have Apple that is going to report. So that's going to be a really good layout for the market because it's going to get extra volatility from the option expiration. So here's some of the worst times to trade: before any economic news release, a couple hours before or even after FOMC, you're going to get a lot of chop. I don't like to trade chop. I don't trade chop. I love my money so much, and I'm into capital preservation so much that I don't need that. Also, option expiration days and also the last day of the month. Careful, because Friday is the last day of the month. Now, I was saying earlier that one of the biggest problems traders have is identifying the directional bias, and they can get really confused with time frames. Am I right? All right, so I'm going to take you real quick right now as an example of how I pre-plan my day and how I go from a higher time frame to a smaller time frame as much as I can in this short period of time. So the number one thing that I do is I go to the very highest time frame, and I go here usually from in January. That's what I do in January. I go to the yearly and the quarterly. So I just want to show you last year performance in NASDAQ. I just selected NASDAQ because it was right here. So NASDAQ, as you can see here, very close to the all-time high, which is 26,399. Okay, so I know that if the price action is going to take out the 399, it will be issuing a continuation higher. Easy peasy. Now we're going to the quarterly chart. The quarterly chart, you can see here, doji. Oh my goodness, doji. No thinking, no brain. We don't need it. We don't need our brain cells. We just know it's bullish above and bearish below, right? So you can mark your areas of bullish above or bearish below. Bullish above would be over all-time high. 399 is going to start exploding. Under 23,904, it's going to start pulling back, most likely to the 10 EMA or the next support area that you identify. So from the monthly chart, okay, this is the monthly chart. So you can see how quickly I go through time frames. It's not that I'm going to sit there for a gazillion minutes. And obviously, as you can see, when obviously yearly charts, quarterly charts, extremely bullish. But when I get to the monthly charts, I really pay attention to my to very few indicators that I have on my chart. And you can see I don't have a bunch of indicators here. By the way, the Williams percent are just used for swing trading. It's not designed for day trading. I use the volume, right? So I like to see what kind of volume we're getting on a monthly basis, on a daily basis, on a 5-minute base, right? Because that is where you can assess, especially in a smaller time frame, when you're getting an algo impulse, right? Okay, so first off, I'm looking at the structure and I'm seeing that we're in a super power trend. The price action is trading above the 10 EMA. This is the only EMA that I'm using. We have the 21 SMA, the 50 SMA, and the 200 SMA right here. And I assess the price action and I look at the candlesticks. I look at the shape, the color, the size, and the location. So 4 elements that I look at. So what happened this particular month is we finally traded above the doji from December. So that means that it got a trigger up, right? Remember what I said, easy peasy, when we looked at our yearly chart and a quarterly chart. So it will issue continuation higher. Now we pretty much have a very impressive bar. We have 2 days left and we're going to be closing the month. So let's see if we're going, because we're very, very close today. We just made a new high. We are at 26,349 and we have a high of 399. So we are just a tad, just a pinch away from making a new high, right? Because the all-time high is right here. So we are into a continuation, very bullish pattern. We have compression. At this level, we have a strong base. Let's go to the weekly. The weekly showing us that we broke the base on January 12th. We pulled back a little bit to the 20 SMA. Notice the repetition here and the theme, right? So we got a 20 SMA visit here, 21 SMA visit here, 21 SMA visit here, and we're very close to the high of the day. Now, at this point, when I am on the weekly chart, is what I do is I want to trace some extensions because I want to know, like, if it takes out the 399, where's it going to go? Okay, so I go to my fix, I execute my extension, okay, to find out where the new targets are. And I know, boom, it's 27,000. This is where the price action is likely to, excuse me, to move forward to. Excuse me, I just had a really bad cold. Okay, so now we're here onto the daily. You're gonna see the higher lows. You're gonna see the compression into the highs. Yesterday and today we had continuation higher. This is the high that we need to take out in order to get into our extension into the 27,000. So that's the new projected target. And there's no doubt about it that the price action is not going to go there. And now that I have all this information and I know super powerful bullish trend on all the major time frames, these are the analytical time frames. Now I'm going to go into my executional time frames. So I'm going to go to the 4 hour. So what I'm noticing in the 4 hours is that we have a huge compression above the 10 EMA, so still in a super power trend, so no reason for me to be short. So I have a super strong compression. Now, this candle is going to close at 4 p.m., right? So when the time hits at 4 p.m., anything that sets up off of that and takes out the high of the candle is going to execute a buy. That means that it's going to execute a rotation, right? A rotation to the upside. And likely, the price action is going to continue into the prior high and into the all-time high. Now that I have that information, I want to look at it because I want to zoom in, okay? So I could see here that I have a balance, really nice balance. And by the way, we are literally like, I think like 6 minutes away, almost 5 minutes away from the top of the hour. So as you can see here, we have the 212 right here, the 212, the high, and we have an inside candle. That means bam, compression. So that means the price action is coiling. And if the price is going to take out the high, is really going to try to move higher. And we have a pretty good support zone. And as you can see, this support zone right here, it is trading. See these prior highs right here that had a momentum of resistance that now is creating a flip zone, a support zone, which is present in uptrends. And then we move on to some executional time frames because we want to know, say, hey, I want to take a trade. Okay, are we ready? Obviously, because we had the FOMC announcement with the rate, and again, the rates are unchanged, will remain unchanged. We don't see a lot of setups right here, but all we see is that there is huge support that has been developed at 26,100. Again, it's a whole number, it's a fulcrum, it's psychological level. And we see that there is some resistance that has developed at 212. So at this point, later in the afternoon, less odds, and especially with 5 minutes into the close, less odds that you're going to have a trade. But the higher odds trades would be the breakout over 212. And when you want to take a trade that is sitting in a really wide range, that's a 100-point range on a 5 minute, that's the new futures market. You want to go a little bit deeper, even on the 2 minute or in the 1 minute. And typically what I do here is I zoom in on the technical image to identify to see if there is a higher low where I could cheat on my potential 5 minute stop. But in this case, I don't, because this is pretty much lined up around the 100 to 130 as well. All right, so that's what I do in the pre-market game plan that I do before the market opens. And when the market is open, I just sit back, relax, and look at my levels, how they play out, right? And remember, we have signals right now on that 4-hour chart and the 1-hour chart. So those are going to be in play right now. So there are 5 steps to, actually 6 steps to the process. I actually forgot to add education, right? Education is step number 1. You need to learn what you're going to be doing in the market. Number 2 is open an account. Determine your risk size, which is so important because the risk is going to make you or break you. Have a trading plan is important, and take it from me. When I first started day trading, I'm like, I have everything in my head. I don't need a trading plan. Yes, you do. And I realized that 3 months into the process, I really was scattered. I was looking for gaps. I was looking for continuation plays. I was looking for breakouts, for breakdowns. I was looking for climactic trends. Oh, I was all over the board. You need to have one strategy, have it in that system, have it in that trading plan, and literally work on that strategy until you really define it and it starts working for you and making you money. Trade your plan, tweak it, eliminate what's not working for you, and that's where the journal kicks in, because you need to write notes and see at the end of the month and give the quarter what worked and what not worked, and you eliminate what didn't work, keep what worked, and it sits only on that. And then analyze the market using the TOL goal analysis system. This is something that we teach as well. And why the goal system? Because it's pure, simple, it's accurate, and valuable. So as we did, and as I showed you, we evaluated multiple time frames. We determined the daily bias, clear setups with precise entry stops targets, because it's not an area where we get in, it's an exact price. We identify velocity, no emotions, no stress, and definitely timing precision. Okay, so within this time, within the power hour, we also generate wealth. Because within the power hour, we also identify the most powerful setups into the futures market for swing trades. Okay, this is where you have your money working for you. Okay, these are some swings that were identified by us. So this is a rotation with a bullish above. This is a rotation with a bullish above. This is the inflection point. This is another breakout with a bullish above. And here it is. This is another trade. We got in right here at 518, and we actually exited the trade because you can see here that is zigzagging around, but we're looking to see more details about this space and actually re-enter at some point, but huge profits over here. So if you want to start trading, if you don't know where to start, you can start following us, and we can point you in the right direction because we offer the market analysis, we offer the trades for you, we offer the guidance, the mentoring, and everything in our trading room. So the markets will remain volatile for a really long time. Volatility is here to stay. Tariffs, FOMC rate cuts, conflicts, war, massive layoffs. You guys heard about Amazon. So I'm inviting you guys to the Futures Trading Room, which is an institutional grade trading system. And you can get to trade with me. If you're losing money in the market, if you're frustrating, if you don't have a system, if you don't have a process to eliminate emotions and noise, if you lack confidence, if you need a hand-holding system to guide you into the trades, I'm here for you. So you can learn and earn at the same time. And I'm not just kidding. And these are not just simple words. I'm going to show you my track performance since 2017 when I started the trading room. So you can see this is not baloney. Okay, develop your healthy trading habits. So if you want to come trade with us, we have a special offer now. We have a problem with the link. The website is our current offer page is down. I have created this. I'm not really sure it's working. Dave told me that it might not work. What I truly recommend is, and we only have 20 spots available, we are offering $100 off the monthly membership for the first month, and then it kicks with $299 after. So it is info@tradeoutloud.com. Just shoot me an email. You don't have to scan anything and say, hey, send me the payment link. I'll show you exactly what you need, what you will be receiving for this. So first of all, why would you join? Well, because I have a track performance and I have been trading for a really long time, and I have a performance that I can show you. Now, remember, a lot of times you're going to hear this. It has been back tested. When you hear back testing, I feel literally my skin crawl. No back testing. You got to do it in real time. Show you the results in real time. We have results in real time. This is our performance for the month of January. There are 2 more days left, and we're really confident that we're going to get 2 more trades or 3 more trades in tomorrow or on Friday, because it is a very busy earnings period. So far, these are my results. I'm risking $5,000 per trade. My traders know and know my account. And currently we have 10 R's into the month. Let me show you what kind of month we had. Oh, and by the way, before that, do you know how many R's you need to double your account? Anybody in here? No? You need 8 R's per month to double your account. Right now, we're 10 R's up and in a very sideways market. Choppy market throughout. We have some shorts, we have some longs. This is the S&P, sideways. Russell, by the way, Russell, we killed it. We had a swing trade. You can see the market is open. This was on January 4th. And Russell, double bottom, rotation, bam. Here we added. You're welcome. That was so sweet. Okay, so again, if you guys are ready, $100 for the first month. You can have more details here onto our website. However, keep it in mind, don't click the link, because the link is going to take you to the $299 per month. Okay, so this is going to take you to $299 per month. If you want to sign up, like I said, please shoot me an email. We have only 20 spots. That's it. So act quickly, and it's $100 off the first month. And we have a 5-day pass for $100 if you're interested in that, fine. But on the bottom here, you have our track performance. Yes, that's right. You have the 2025, you have the 2024, all the way to 2017. Yep, that's right. All right, so this is pretty much it. I can walk you through a little bit of what you get. First off, when we meet up, we do a pre-market game plan, and then we we funnel to 1 or 2 indices. We select them and we focus on that 1 or 2 indices, and we look for an entry, for a stop, for a target. You're going to get live. I'm going to be on the mic all the time throughout the life of the trade, and I'm going to trade it live for you and trail it for you. You got to do the position size. You're also going to have access to the performance portfolio, which is real time. We provide you with the risk calculator right here, where you're also going to have the option expiration. You're going to have holidays. You're going to have expiration calendar indicators that we use, the think or swim link that I have. We have our own prop trading section in our company. Here are some tools, disclaimer, rules, so you get the picture. You get everything. You get everything with us. So if you're ready to join, more than happy to help you out with trading. So thanks so much, Dave, for having me here.